to enhance or update my finance skills. I have a background in finance and accounting.
Right.
So things I'm sure have changed. So I want to keep abreast of what's going on and how I can use the new information to
Right.
help my clients be better businesses.
Right. You're welcome. You're in the right place.
Thank you.
Uh,
Thank you. Thank you.
we hope we will uh, satisfy that need. Thanks, Christine, for letting us know what some of your expectations are out of today's session. Uh, keep your expectations, keep letting us know what your expectations are in the chat box. Keep typing and let us know where you're logging in from and what are some of your expectations for logging into today's webinar. Now, without taking too much time, my name is Derek Weiswer. I'm the Chief Operations Officer at Transformational Business Network, and you are welcome to today's webinar that we have called From Chaos to Clarity. And we do understand that as business owners, as entrepreneurs, your financial paperwork sometimes is not in the right place. And income statements and balance sheets make your heads to spin and maybe even give you sleepless nights. And we're here to say that through this session, we will help you to stop guessing and start mastering your business finances and helping you to turn those sleepless nights into confident decisions. What we hope to unlock is that we will help you understand where your money is going because many of you don't understand the cash flows, the cash flow leaks. So our facilitator today will help to slash the cash flow leaks and spot the financial fires before they burn you. Where are some of those leaks that happen in your business? But we also will help you look at what do these reports even mean? Decoding the big three, the income statements, balance sheet, cash flows, and the like. And some of you hate paperwork because you're business people, you want to focus on what is important, what is core for your business. So we will attempt to help you hack your bookkeeping with simple time-saving tricks. And you don't need an accounting degree to do this. So without further ado, I would like to invite our facilitator for the day. If you have gone through our TBN program, then she's known to you. She's CPA Purity Gitonga Wainaina, and an amazing facilitator, trainer, coach. She removes all the she makes you fall in love with finance. She makes you fall in love with bookkeeping. She simplifies how you should run your business when it comes to matters finance. So Purity, you're welcome. Take it away.
Hey, thank you. Thank you. Thank you, Derek, for that introduction. It's humbling and it's nice to be a facilitator for today. Please allow me to share my slides so that we get to it right away. As Derek has rightly introduced me, I'm Purity. Maybe I'll just change the order of the names. It's Purity Wainaina Gitonga. Yeah, so these are my credentials and my experience, but what I always say is these are great, but what is greater than all this is my love and desire to empower entrepreneurs. So I have an MBA in entrepreneurship. I'm an alumna of the Babson Kenyan Women Entrepreneur Leadership Program. I'm a CPA and Become Accounting, and I've got over 20 years experience in financial management, audit, and risk. I'm a director at Testify Consulting. I'm a growth stage business advisor and trainer and coach. And this I do with various entrepreneur support organizations, TBN being one of them. And I've also been a trainer with the International Trade Center. So This is just a little about me, but like Derek said, to crown it all, I love breaking down finance for non-finance people, and even for the finance people, I like breaking it down together because I feel like they are just nice, simple things that if we did tweaks in our businesses where finance is concerned, would be thriving. But the reason we are not able to do that is because we are not aware, or like Derek said, you hear finance and your mind locks, you're like, oh no, so this morning, I pray that if you're here and your mind is starting to switch off, no, there's no opportunity to switch off. We're going to have fun together. My desire is that this will be a very interactive session. It's not Miss Purity telling the founders, no, it is us dissecting this together. It's just me bringing a few concepts up, we discuss them, we see how they relate to our business. I hope you cannot promise me to have a fun session, because finance is fun. We are all entrepreneurs because part of the reason we enter, not because we want to make money, and then money to make and make our businesses grow. So this should be fun. So what are we covering today? We will do bookkeeping, then we'll look at the outputs of bookkeeping, which is really financial statements, and then we'll look at just a few actionable tips that we can take away and go start activating our businesses. So I know Derek has already asked us to type in our expectations, and I'll give us 1 minute to either unmute and share what your expectation is for today, or type for us in the chat. Would like to know what are you expecting today? Let's hear, what are you expecting today? I have a good presentation, but it would not be a great thing if at the end of my presentation I did not meet your expectation, but I can know how to coin my session to ensure that I'm meeting people's expectations. I've already captured 2: ability to interpret financial statements, and another one is easy language support with financial management, and we will do that. Any other, if you have any other expectation, kindly post in the chat, or you can speak it out. Jeremy is saying that Dr. Jeremy, my interest is how to change theory to practice. Okay, so I'll attempt to do this, Dr. Jeremy. And where you feel it is not, please let me know. Then we have Anne Burrows saying that, oh, you're not able to speak, but you write. Please write for us your expectation. So you said that you expect to learn more on financial management. Great. The hacks of daily bookkeeping, we're going to look at that. Clarity on understanding your business numbers, that's from Linetta. Charity, you expect to simply understand how to do record keeping and manage finances for a small business or a startup. Okay, so I think what I'm hearing is we want to understand, how do we do this thing day by day? And also, how do we understand the output of our day by day, which is our financial statement, and how to know if you're making profit. Great. So I'll attempt to do all this in this session, which I gladly facilitate. So to start us off, I want to know, look at this and tell me whether it ever feels like this in your business, and why it feels like that. Anyone wants to speak to this? Does it ever feel like this sometimes in our businesses?
Hello, this is Helen from Uganda.
Yeah.
Yes, it does. It absolutely does. Personally, I am a founder, and I've enjoyed creating and making things. But when I started to transition into CEO, like the company is now growing, and then have to figure out taxes and pricing and daily cash flows. It's just so frustrating. I don't understand it. It makes me sad. Actually, some of the words in the in the ad, I don't know if I should call it an ad, I really related to them. It's like so frustrating and stressful. Every time I hear financial stuff, my brain just freezes, literally freezes. And yet I have to do it. Otherwise, how am I going to run a company? Yeah.
Thank you, Helen. And I pray by the time we are done with this, we can help you not to freeze and just figure quite a number of things out. Okay, thank you. Anyone else who ever feels like this, or who used to feel like this, but now you no longer feel this way because things have changed? Anyone? Yes, Dr. Jeremy.
Yeah, I think for me, I kind of feel the same sometimes, especially because you can see the money move, you can see it coming in, and it goes out in many ways. So at times, without the proper financial books, you're not sure if you're making money. This is a question I keep asking myself. Am I just a busybody and money is just flowing through me?
Thank you. Thank you, Dr. Jeremy. And we are going to see, we will get deeper and see how do we make sure that as money flows in, we have visibility of how it's flowing in and flowing out. Because that's usually a big problem with founders, especially when we are starting out, because money comes in and before we can consolidate it, what does it do? It has all these different places where it needs to go. So Jeremy, we feel you. We pray that, again, by the time we are done, we'll have gotten help. All right, we can have one final one. And at any point, if you want to ask a question, kindly just raise your hand. Like I mentioned, I'd like this to be very interactive. So one more person. I'm seeing what's going on in the chat. People are saying yes. Someone said they feel frustrated and need liberation. They would love to understand audited report. It happens a lot in business. Yes, most of the time. So Daniel says that he feels like entrepreneurs are brokers for financials, only that they often don't get that commission due to a broker. Daniel, we will change this story today. All right. Okay, let's go on. So then let's move on then to what is bookkeeping, because that's one of the things that we said we are going to cover today, which is bookkeeping. And what we are saying is bookkeeping is a systematic process of recording a company's financial transactions. Please note the use of the word systematic, yeah? Meaning it's not a haphazard thing. So today you record, tomorrow you didn't record, the other day then you remember. It is not it's not an erratic thing. And also it's systematic in a way because we are talking of, if we are recording, we need to record sales, we need to record expenses, and they need to be recorded in a certain way, not just recording. So that's why we call it a systematic process. And this can be done using ledgers or accounting software. The beauty about the day we are living in is you do not have to go by actual ledgers to enter your transactions. And if you're doing that, I would highly discourage you. At least you're doing something, so I applaud you for that. But I would like us to move to the next stage. So we are saying that then this is the process of recording your financial transactions. And I think the reason why most of us here are frustrated is because even before we get into any other conversation, this is not happening in our businesses. We probably use money, pile all our receipts together, so we pile all our receipts together or pile our invoices, however way you do it. Then you call an accountant once in a month, or when audit time is near, you call them to come and start now figuring out these receipts that you've put together and putting them into an accounting system or an Excel sheet so that you can get your book. So that could be one of the reasons why we are feeling frustrated and feeling overwhelmed, because that's a very common story. And we will see how to address that story. So other bookkeeping tasks include reconciling account books with bank transactions. This is a very key element. If you're taking notes, and you have someone who does for you accounting, or you don't have, this is one of the things that are very key to bookkeeping: bank reconciliation and customer and suppliers reconciliation. That's why I call them just reconciling account books with bank transactions. So you need to ensure that there are reconciliations happening in your business consistently, so that at any given point, what is in the bank speaks to what is in our cash book, in our businesses. So let me also say what that is. A cash book is that book that shows an entry of every money that has come into your business and every money that has left your business. It could be a physical cash book, it could be an online cash book, an Excel sheet, or you could be using an accounting software. But cash book is the moment you buy you use money to buy something, it needs to reflect that I have bought, say Daktari, or Dr. Jeremy, I have bought consumables worth this much. That should go to the cash book, and that should be reflected again in your books as an expense, but the cash book shows that that money has left. When a client comes into your clinic, or you do one engagement to the client and they pay you, a cash book also shows you that money has come in. We post that money in the cash book. So that's what a cash book is. So we are saying that every time you need to reconcile your cash book with what is in the bank, because the assumption is you bank your money when you get it. Money coming from your clients goes to the bank. So you need to always know, is what is in the bank showing what is in my company, or is what is my company showing what is in the bank? Generating invoices and tracking payments. Again, this is something that happens every day. Tracking expenses, managing payroll. This means originating it, ensuring all the transactions all the entries on your payroll are correct, and running the monthly payroll. Someone mentioned about tax. Also preparing for tax returns. So these are tasks that are actually part of bookkeeping tasks, and they need to be done every day, if not every week. They need to be done regularly. Of course, there are those like payroll that are done monthly, but these are the things that are almost an everyday task. So that's what bookkeeping is. And why do we need to have proper bookkeeping? One is you need to have accuracy of business records, because if you don't have accurate business record, like someone rightfully said in their expectation, you won't be able to know whether you're making a profit or whether you're profitable or you're making losses. Is in tax matters. Again, this begins with posting your transactions correctly, because then you're able to deal with the tax man. Then there's building financial credibility. Every time you go to the bank to ask for a loan, or you to speak to an investor to get some money, what happens? They always ask you for your financials. So can you imagine if you don't have financials, what will happen? And you cannot have financials if you're not doing bookkeeping. So bookkeeping is the entry point of having the right financials. So very, very important, because it helps in building your credibility. It enhances decision making, because you can be able to track. You can see, this is how much I made last month, and this is what I've made this month. Am I making progress? Or this is how my expenses are going. So that's what bookkeeping does. Then ability to measure business progress. Of course, as you compare periods, this period with the other, then you're able to see how you're progressing. And then you're able to detect fraud and errors. It is such a sad thing when a founder tells me that they've discovered fraud in their business, and then they've discovered it after it has been happening for months, because they didn't have visibility of their book. So that means that by the time they realize something was off, it is like long after things have been happening. So my encouragement is, let's ensure that our books are current, they're up to date, because that way we are able to capture things when they start happening in our businesses. When things are not adding up, then you're able to tell something is off here. So I'm going to pause there and ask us a question. If you have any question, you can share. But I want to ask, what strategies or tips have worked for you in bookkeeping? Because we can't assume that we are all doing badly in bookkeeping. So if there's a strategy that has worked for you, kindly share it with us. This is your time to hear how this has worked. Or if there's something that I've shared that you're like, I'm not sure how to do that purity or how that should be done, then this is your chance to share. So kindly go ahead and share before I go to the strategies? Any question or what has worked for you?
I think I can share one. I think initially for us, we used to use WhatsApp groups. So we had a group for all the expenses, for incomes, and any expense would be posted there. But then sometimes we would forget, and then reconciling would be difficult. But also the good thing is that all the transactions are happening on the M-Pesa app, so we were able to do that. But then also what we discussed, and that has actually helped us a lot, because now we're able to track all the expenses. We also, so all the expenses now, you can see all the expenses that are happening. So that has really helped us to track, especially expenses, because we didn't have an issue with the income and the rest, but expenses was the challenge. But now with Tender Pay, we're able to capture all the expenses.
Nice. Nice. Thank you, Jeremy. Yes, Tender Pay is a really good one. And just to what Jeremy is saying, what I see people do is you move money from your main bank account, depending on what is the budget for your month or for a week, put it on Tender Pay. Then, of course, there are also approval levels. There's an initiator and someone who is going to approve that transaction. And then when it's paid, you have it there. It has already been paid, and you can even link your Tender Pay with your QuickBooks or whichever other accounting platform you're using, so that once you pay it, then it hits all the accounts in your financial management system, and that way you're current and up to date. Thanks for that, Jeremy. Anyone else? So there's someone who said QuickBooks has helped us. That's Doreen. Thank you for that, Doreen. Then Excel file record has worked for us. That's Milton. Thank you. Keep them coming. Let's hear what's working for you. Anyone else would like to speak to what has worked in their strategies or tips for bookkeeping? So let me share a few of these, then we can see what has worked for us. The first tip that I would like to say is separating personal and business finances. And if you've gone through the TBN program, you know that this is one of the things that we speak about in detail. Ensuring that there's such clear demarcation. If it is bank accounts, you have different bank accounts. If it's M-Pesa or mobile money, there are those in Uganda, you've separated that. If it is credit cards, you have different credit cards. So you're ideally just making sure that what is business, what is personal. Then the other strategy is to set a regular bookkeeping schedule. So that it's not spontaneous, not erratic, it's very scheduled. You know that every Friday we have to update our financial records. That is if you're not able to do it every day. Of course, my advice would be you do it every day. But if it cannot be done every day, can you set a time when it is done? If someone comes in to help you do your bookkeeping over the weekend, then let it be consistent and let it be known that every week we have to capture everything that we have done. Then keeping digital records and receipts, and this you can use apps like Expensify. So you're able to spend, and then you can be able to upload this the receipts or the whatever the receipts that you have received, you're able to upload them on Expensify, and that helps you because you're able spend, but at the same time, I'd like to encourage us to maintain hard copies for backup. It's important if you can be able to, because you have it anyway. Once you scan it or upload it, just store it securely and in an orderly way, so that if you ever need the hard copy, you can be able to get it. Then automating recurring transactions like payroll, invoicing, bill payments. There are those things that are recurring. You don't have to have someone spending time every month invoicing the same amount to the same person. Is there a way your accounting system can help you do what? Just automate that so that it auto generates when something is required, when the payment is due, then this can just be generated. Then there is monthly bank, clients, and suppliers reconciliations. I'd already spoken into that. And then there's the whole issue of choosing the accounting method to use. And allow me to camp here a little, because I usually find this brings a lot of confusion between accountants and founders. So there are two methods of accounting. One is called cash-based. So cash-based is where your income and expenses are recorded only when money changes hands. So if today, again, please allow me to use Dr. Jeremy's example because I know his business. If today I again walk into his clinic for services and I'm treated and I don't pay money, then you don't recognize that as an income. He will only recognize it when I get to pay him money. And then when he incurs an expense but has also not paid for it, he does not capture it as an expense. So that means here is where you're doing bookkeeping based on, did money come in or did money leave? And I'll explain. That's one of the ways for businesses that are heavy on cash. But it is not the ideal method of accounting. It is not the recommended method of accounting, either by generally accepted accounting principles, which we call the GAAP, or the International Financial Reporting Standards. It is not the recommended method. The recommended method is what we call the accrual-based method. So in this method, you record incomes and expenses when they happen, even if money hasn't been received. So like if you make a sale today, even if you haven't received the money, it needs to be recorded in your books as a sale. If you spend money today, if you if you incur an expense today, for example, the same example I was saying, if today Dr. Jeremy buys a whole lot of drugs and he's not paid for them, but he's actually gotten an invoice, it's just that it is not paid for. That is an expense, but and will be keyed into the system even if the money has not been received. So it's important to note that, so that you're not always having in loggerheads with your accountant. You're wondering why is it that there's no money in the account, but we are seeing that there are sales. So your profit and loss is showing sales, but your bank is not showing money because someone is not collecting the money. So let me pause there and ask, have we understood that difference? Because it is very important to understand that difference. Any question? We are clear on that? Okay, I go on. I'm sure there's a question we will ask. So the other thing is track cash payments. And this is what I would say about cash payments, because this is something that from the way we've spoken here, there are people who are experiencing this. Excuse me. So you find that some businesses have money coming into the business in cash form, right? But they also have expenses. Sorry. They also have money leaving the business in cash form. So you find that most people, money comes in and goes out without necessarily being banked. And the problem with that is you're not being able to keep tabs of the money that is coming into the business and the money that is leaving. So what should you do? You should ensure that if money comes in terms of cash, bank or payments, let it be clear this is money that has come in. And then if you need to channel money to for the day-to-day expenses, use things like now what we were saying, Tender Pay, Kopo, those platforms that Niobe, those platforms that can help you pay out either, like directly from your bank or from an M-Pesa line, so that you're able to ensure that all the money that came in is going to a centralized place and we can track it. And every coin that is leaving, we can also be able to track it. So that is one of the strategies of ensuring that you're keeping your money safe, and you're also there's accountability on money coming in and money going out. So continuing again, leveraging business management platforms. So the reason I use business management platforms and not necessarily accounting, financial management systems is because most of these platforms have both. Most of these platforms have both. There's the there's a CRM component on it, there's a bit of invoicing, and now there's a whole payment bit. So these platforms help you ensure that you're avoiding to do things manually. If you're making a payment, you're making it online. So things are captured directly and recorded into the system. And if it is a system that is also linked to a financial management system, then it hits your financial management system, meaning it hits the accounts it's supposed to hit immediately. So these are some of the things, some of the platforms you can use, or softwares that you can use, or apps you can use to ensure that you're on top of things matters finance. And add to this tender pay, like Jeremy has said, and also Kopo, they have similar abilities. And finally, once you've been able to do your books because you're on a proper business management platform or a financial management system, review your reports monthly. And if you can do this even weekly, please do. Every month, ensure that you have a profit and loss, a balance sheet, a cash flow, and other management reports as is deemed fit for your organization. And I'll take you through these 3 financial statements and what they mean for your business. So before we move on now to the outputs of bookkeeping, I'd like to pause there and we just have an interactive session on what are you struggling with, and do you feel like these bookkeeping strategies that I've shared with you work? And if they don't work, if you feel they don't, could you share your challenge with us? Then we can see how can we help you think through something that would actually help your business. So I'm going to stop sharing because I'd like us to have a bit of time like that to just hear each other out and get to know where our struggles are. So any question, any comment, any...
Well, maybe I'll open the floor. Thanks, Purity. Let's take, for example, I'm a small business owner. Don't have money to pay an accountant. I'm very focused on running my business that I lose track of how I should spend the money. I understand that this has to be done, but how can I do it better? Do I need to hire someone? What would you advise? I'm assuming I'm a business owner. I'm trying to ask on behalf of whoever might be here who might be afraid to ask.
Okay. So there are different ways of going about that, Derek, yeah? So one is, if you remember what we said, you need to schedule a time for doing your bookkeeping. If you're the one doing it and you cannot afford someone else, yeah? So schedule a time. There's this statement that says that what does not get planned for does not get done. Yeah. Like if you don't plan for it, it will not get done. And there's also the issue of the tyranny of the urgent. Founders, this is something you just have to get on top of. Everything in our life seems very urgent, yeah? People are calling for payment, it's very urgent. We need to get to meet the next client, it's very urgent. So if you look at your life when you're starting to build your business, everything is urgent. So one of the things that I have learned, even for myself, is learning to schedule things that are important. Because when they're not scheduled, then they disappear somehow. And then you know what will happen to them because they don't look urgent? The moment they are ignored for a long for some time, they become urgent now. Because June is here. June is 2 months away to go, 2 months to go. And if if your books are not up to date for last year, how are you going to do your tax returns? So you see, something that you could have been doing month on month becomes an emergency because now we have to do a monthly return. So that's number one. Just schedule time for it. Number two is, in this scheduling time for it, what will you be doing? Key to bookkeeping is understanding your incomes and understanding where your money is going. So in a very simple way, even if you don't have a platform, can you have an Excel sheet that tracks what is coming in it's coming, the date, the person who it's coming in from, and the amount. Then have another sheet that talks about that shares the expenses, and Derek can share a cash book, like an Excel cash book that could help someone. Of course, they would need to go and adjust what is coming in, the dates and all that, but it's a general template that you can be able to use to key in money going out and money going out, to at least know where you stand at. Where you stand matters money. So that's something I can share with Derek and he can share with us. So capture your income, your money coming in, and capture your money going out, bare minimum. But because you do not have accounting knowledge, but you need to have this done right, either get a platform where you can key in the information of money going out and money coming in, and it generates for you your reports, or hire now someone who can come in with skill and do this for you. It may be once a week, or you can agree once a month, so that they can come now and do the accounting bit of that capturing of that information. For the expenses, they will put them in the right accounts. Remember, they are what we call ledgers, and that is what helps generate your financial statement. So they would come and do all the entries, then now generate a P&L for you. But the initial entry, if you don't have an accountant, fortunately or unfortunately, you would need to do it, and especially if you're the one doing the transaction. So that's one way. Those are two ways. Then the other way is using platforms like I was saying, like Tendepe or Kopo, or all those that have highlighted that. They've really helped founders, because most of the work, the challenge is usually expenses. If you pay using the platform, then that means it's hitting all the accounts it needs to hit, and you can be able to run a report and it shows you where your money has gone, even as you're capturing in where the money is coming from. Because first of all, the bank will sort you on the money coming in. If you have a till number, it will sort you, or a pay bill number. So you find that the money coming inside, unless you're doing cash, is not usually a big problem, like where money is going. I hope, Derek, have answered you.
Yes, you have. Thank you.
All right. Helen Agume.
Thank you. You are talking about it a bit, but I'm not really getting it. How to pay out money in a system or in a way that allows me to track it. Because we are, I think, doing quite well with banking, all our income. But then what happens is when we need to spend, we'll make a budget and we'll withdraw like a lump sum and then have it as cash in the office, and then tracking where it actually went is still a challenge for me. So someone mentioned something about tender pay, but I don't know what that is. I was wondering, is it like how we have mobile money? And then would that then mean that we withdraw the money, put it on mobile money, and then send it out to the different expenses? I just wanted to understand that system better, the cash out.
So I will talk into it, but let me ask Dr. Jeremy to, because he uses it, yeah? He uses Tendepe. I believe Tendepe should be in Uganda, but I'm not sure. It's a Kenyan system. So I can check if it's in Uganda, and if it's not in Uganda, what else is there? Because there are a number, but one of the ones I mentioned, Nairobi, is in Uganda. So, Jeremy, please speak into how it works for your company, and then I can add, so that you hear practically from someone who is using it. Some of the clients that I serve actually use Tendepe, so I can speak to it from the point of having seen the system, having reviewed the system. So, Jeremy, if you're able to kindly speak into Tendepe, and then I will add on to that.
Hello, everyone. I think for us, as you mentioned, income was not a challenge because we receive all our payments either on the M-Pesa till, or people pay directly to the bank. So we're able to track all the income. The challenge was the expenses. So as I mentioned, when we were introduced to Tendepe, so it actually helped a lot, because now all we do is, so all the payments, even the ones that come on our till number, go to the bank. then it's very easy to transfer from the bank to TenderPay. So TenderPay is a platform. They have a web. You can either use the web or use. They also have an app. But what you need is you need to register as a business. You can only register as a business. So once you get registered, there are documents they'll ask you to send in. Then they approve you, and once your account is approved, then now you're able to transact. Yeah, I don't know if it's available in other countries, but I know it works well here in Kenya. So what happens is now you're able to fund your account. So it's like you have an account with them with TenderPay, similar to what you'd have with any mobile money like M-Pesa. So instead of using, and the good thing with it is now you're able to, you can even store your regular payments if they're either, so for us, we use it for everything, even salaries and all that. All the expenses that the company incurs, we do them on the TenderPay. So you're able to save like regular payments that you make either to suppliers or any other person that you pay regularly. And the good thing, as you mentioned, is you can generate a statement each person, and then every month you're able to get an expense statement, which now this is what now your accountant or whoever is helping you with the accounts that they look into. So the good thing is once you make a payment, you also put in a reason for that payment. So it helps you a lot. You're able to classify even your expenditure. Yeah. So I think for us it's helped us a lot because the expenses were a headache.
Thanks. Thanks, Jeremy. And this is what I'll add to what Jeremy has said. So one of the things you could do, and don't worry, our Ugandan friends, we will look for the equivalent of TenderPay in Uganda. Derek, we can give that promise, right? So we will look for that. So what happens is you have and I hope now I'm getting to another aspect of this, but it's important. I would rather we live here with very tangible things that we can go is than have a lot of information that we are like, how am I going to apply this? So do a budget. I hope we all do budgets. Like you have a monthly budget. We know in this month our expenses are 1,500,000, whatever that amount is. Then now, because you are very clear. Yes, Doreen, I've seen your hand. I just wanted not to lose trail of the tender pay issue. Then I will allow you if that's okay. So saying you have your budget. Then now once you have the budget, you know that you will only transfer the money that is supported by the budget. Then on this other side, Helen had asked about keeping tabs, ensuring that anyone making a request, even if it will be paid through TenderPay, there's a petty cash voucher, there's a petty cash voucher attached to the payment, or there's a requisition. So the requisition helps in understanding what are we asking for and why are we paying. And requisition, you can have it as online, you can also have it as physical, depending on where you are at in terms of your operations. Once you do that, then you're able to, now that is the expense is authorized, because at the end of the day, you want to ensure that you have visibility of how you're spending money. So you need to have a system that gives you the visibility of how money is being spent in your organization. And so this thing of making sure there's someone who initializes and someone else who approves, it helps you to see that, to help you to know what people are spending money on, and people cannot just spend money because it's on TenderPay or it's on in a platform. So there's that also. We call it an internal control. There's that internal control. You initialize and someone else approves that transaction. And from there, then you will be able to know where you're spending your money, because like he's rightly said, you can run a report and you don't have to wait to run it at the end of the month. You can run it maybe every week. You can run and see how have we spent money, and you can compare it to the budget that you had and see, are we having variances? Is there something we hadn't thought about? So that's how you can use that tool. Doreen, please go ahead. Doreen?
Good morning.
Morning.
Thank you so much, Pirit. Actually, you've mentioned some of the things I wanted to say.
Okay.
I work for Africa Biolabs and in Kampala, and we supply lab consumables. So what we do in case we want to withdraw money, like the way she mentioned, we first make a budget. In case we want to buy something, we first make a budget. Then when it comes to making expenses, whenever you're buying something, there's just a lot in my mind. Whenever you're buying something must have, the person must come with the paperwork attached, the invoice, the delivery note, the receipts. Then when you get that invoice, to help you track, we enter it immediately in the, okay, we first make a payment voucher to prepare that, the transaction before you withdraw the money from the bank. Then you attach that budget. Then when you give out that money, you attach the paperwork, of course, behind the voucher, but also enter those invoices on QuickBooks Online. That's what we use here, on QuickBooks Online immediately. So it helps you track. Then also, when it comes to these petty things, petty cash, when you're withdrawing a handsome petty cash, we have a payment voucher prepared, a hard copy, where you know what let's say it is for water or it is for transport. You sign on that payment voucher, then someone else authorizes before the payment goes out. Here we have a paying cashier and a receiving cashier. A receiving cashier is the one who receives this, the people who want to buy things. Then a paying cashier is the one who pays out. If you want to buy something, you go to that person, they sign on it. I want to go here, you sign. Then you take that paper for someone else to approve. Let's say the director to approve that payment before it goes out. So it is just a lot, but that's it. That's a hint.
No, not Doreen. It's not a lot. I'm impressed by what you're doing. And if you listen to what Doreen is saying, there are lots of internal controls. If you hear she say there's a receiving cashier, there's a paying cashier, meaning the two roles are not done by the same person. And I understand that right now, some of our businesses that can't happen. But as our businesses grow, it's nice to draw those lines. And I like the fact that there has to be documentation to show why are we paying money, what is it for. And like we said, it doesn't have to be physical copies. It can be online. It can be things like some of these accounting systems. You can be able to approve a requisition online. You can be able to raise a petty cash voucher online, and so you initiate it and someone authorizes it, and the payment is done. So all we are saying is there is need to systemize what we are doing so that every day is the same matters finance. We are not saying today we do things this way, then tomorrow we do things that way. It really helps. So I've tried to look around for the equivalent of Tender Pay in Uganda, and I'm seeing there's Easy Pay, there's Flexi Pay, and there's Hepta Pay. And all these platforms allow users to make electronic commercial transactions and transfer money and pay bills. So again, we will commit to seeing what other platforms could be there, but it is important to know what else can we use even in addition to our financial management systems that could simplify our payment process. Great. So any other point on that before we move on? Any questions someone feeling? Helen, are we starting to make headways?
Yes, please.
We are?
Yep.
Yes, we are not leaving this place feeling like accounting is just disturbing us, Okay, there's someone saying that Dr. that name is difficult. Ahimbi Sibwe, good morning, colleagues, as if FlexiPay doesn't always pay. Okay, it's nice that someone is saying FlexiPay doesn't always pay, so you need to do your homework on some of these platforms so that you see what works best. But we will commit to doing that homework, and share. All right, nice. So we can move on now to the next thing which I want us to discuss. And I want us to talk about the outputs of proper bookkeeping. Let me add proper bookkeeping, not just bookkeeping, because bookkeeping, if you're not doing it the right way, it will give you, like what we say, garbage in, garbage out. It will give you not the so desired output. So we want to ensure that bookkeeping is done the right way. So do bookkeeping. Then what's the output of the bookkeeping? And we have two outputs. One is we have the management reports and the financial reports. And I want to ask here, do we understand the difference between management reports and financial reports? Okay, Dr. Jeremy, you're asking, how do you put in internal controls? This is a challenge we are currently facing. Do you mind, Doc, putting a pause to that question, and then maybe I try finish what I'm sharing, then we can come back and talk about internal controls. Is that okay?
Yeah, that's okay.
Okay, all right. Okay, so management reports. What are management reports? Okay, fine. What are financial statements? If we don't know what management reports, what are financial statements?
I wanted to
Hey,
attempt.
Mike. Okay, please do.
I think management reports that can help you make a decision from the numbers.
They can help you make a
So you-
decision.
From the numbers. From
Okay.
what I mean is like you can see whether you're making a profit, whether you're moving forward or making losses. So they help you make a decision. Yeah.
Okay. Thank you. Thank you, Helen. Anyone else? And anyone who has management reports for their business, they can share with us what they do with those management reports.
We have some management reports. We had to get them because they were required for some, some opportunities that were coming in. But I'm told management reports is what you get before you get the audited reports. What I can remember from them, like I said earlier, I don't really do well with financial information, but within the management reports, there were things like income. Then they categorized expenses. They put expenses in categories. I think there were capital expenses, okay, different kinds of expenses. And then there were also, in that management reports, there was profit before tax and then profit after tax, I think. Yes, but I know it's also what can be used to file like income tax. And yeah, roughly, that's what I know.
All right. Anyone else wants to speak into management reports? Okay, so thanks for sharing that, Helen, about management reports. So these are really reports aimed at informing the management of the different aspects of the business. So they could be unaudited P&L, balance sheet, and cash flow statements, but they could even go at a level deeper. So if it is a P&L and it has the sales, the expenses, you can have a management report that tells you more on how the sales are performing, what were the top, how was how is the revenue allocated amongst the various revenue streams? If it's the expenses, what expenses have moved, have increased in the last 1 month? So a management report can tell you more than just your regular financial reports. That's the aspect I'd like to look into management reports. Unaudited financial reports are also management reports. So the reason it's important to to be clear on what management reports can do, is because when people think of financial reports, they go to financial statements, which is a great thing and it's important. But even as you're thinking about financial statements, you need to think about those reports that can be run in your business that can give you key data that you really need as a founder, as a CEO of your business, or as a leader in your business to understand the performance of your business. So these reports will collect data from various departments and track your key performance indicators, and then present this to management in an understandable way. So look at them as those reports that really tell you about the health of your business and can go a layer deeper than just what you would get from the financial statements. So, and I want us to pause here and talk about, okay. So I want to pause here and think, given this definition that I've given us on management reports, what are those key reports you would like to have for your business? Or let me first go through this. So these are some of the questions that management reports can address: whether your pricing for your product or service is right, whether your sales and expenditure, how they compare from the last quarter to the current, or last year to this one, what are the most profitable products or services, whether you have enough cash to make payroll, or who are your most or least productive staff. So you see, it goes deeper. Financial reports give you one level of information, but this can really drill deeper into what are other things that you'd like to know within your business. And why they are important is because they help you focus on your strategic metrics and assess the performance of the business. And this can be either financial or non-financial. It helps benchmark with performance a track record. So if you have a track record of what the business is doing, then you can benchmark it with other players in the industry. As it also gives you a snapshot, which is dependent on what you consider useful. That's why the management reports for different companies may look different, because different people would view different things as useful for their businesses. What Daktari would need for his medical business is not what Helen would need for her business, is not what Dr. Specky would need for her business, as much as they are both in the medical field. So it's important to be clear. What is this that I want to be seeing as something that I want to have visibility on almost every week or every month? So of course, it helps you also to learn and reproduce, because you're able to know this is what worked. If this worked, we can do it again. If this didn't work, then we need to change how we are doing things. And finally, it enhances communication. So if you have investors or partners, they will require some sort of reports on how the business is doing. So it really enhances communication with other players. So I will pause there and you can post for us. What are the 3 management reports that would be key to your decision-making process? So like we said, everyone considers different things for their business. So let's see, what are some of these things that would be very critical for your business? You can speak them out. You can post them on the chat. What works for you? Dr. Specky, what 3 management reports would be key for your decision-making process for your business?
I think for me, the one of the ones that would be important is, do I have enough money to make payroll?
Mm-hmm.
To make payroll. So the cash statement would be a good one. Then also comparing quarters. There are certain times I know in the year when there's not much money flowing.
Mm-hmm.
So looking at those quarterly reports are also important. And then the other one is, I'm always wanting to look at my tax planning. So I want to know what are my taxes expected to be. So this is my revenue this quarter. What is my total tax that I'm expected? And from the installment taxes that I have been paying, am I falling back? Do I need to catch up? Do I need to start looking to withdraw money from savings so that I can ensure that I'm on top of my tax, so that I can avoid penalties and interest in case I am late with paying taxes? So those are some of the ones that I find important.
Wow. Thank you, Doc. Anyone else want to speak to reports that are important for them? Derek, there's a question from Gavin on getting a copy of the presentation. Then Helen talks about sales. So Derek was speaking to that, Gavin. Helen talks about sales. Then Washira is talking about profit and loss, sales report and expense reports. Then we have operational management reports. Gavin talks about sales report, budget variance, trend analysis reports, operational management report, and sales and marketing. Julie, it would be nice for you to. Jasonia, please mute. There's someone, Julie. Please unpack for us what you mean by operational management report. If you're able to unmute yourself, if not, you can type for us. Then there's Dr. Jeremy, patient admission trends, caregiver hours worked, client satisfaction scores. So there is Mercy talking about able to do SWOT analysis of the business, profit per product or service. That's very, very important. David is talking about cash flow statement, balance sheet, and P&L. Then sales and revenue reporting, CAM, trial balance, operational cost guides our decision making henceforth. Good. So Julie, kindly break down operational management report for us. And the next question would be then, are we getting these reports in our businesses? And if so, why not? We know we need them. Are we getting them? Are we keeping tabs of them? And is there a reason why we are not getting them if we are not getting them? Anyone wants to speak into that? Hello, people. Anyone wants to speak into why they are getting or not getting? I'd like to hear what's working. Like all the management reports you need are given, and there are things you've put in place to ensure that you get these business reports.
I think I can say some. I think, as I had mentioned earlier, one of our expectations was, because I think for me, we know most of these theories, we know what is expected. But what I've realized is sometimes we just get busy with the operations, like just making sure things are getting done in the office, patients are being attended to. So what happens is every time we meet is when we are like, we've not generated these reports. But then you realize actually people are busy doing other things. So it's something we are hoping we can change, maybe even with additional staff. But I know that has been a challenge for us. We know what is expected, but not actually doing it.
Okay, I think, Doc, I would say, why don't you go back to the point I talked about, scheduling time for it? You know, with all the emergencies going on, and I know your facility handles emergency work, but with all that going on, is there a way of scheduling time for doing this? And it doesn't have to be the same time for everyone, because of course there are staff that are highly involved in some emergency work, but there are those that are not. So you find that it's either they're overwhelmed or they are just like, oh, this can wait. It's about, reporting what needs to be done. And by the way, in fact, as I speak about this, I want to speak. This is not, I've just remembered it's something that is very critical when you're talking about management reports. When you think of your key performance indicators, you always have to think about what are the leading indicators and what are the lagging indicators. And one of the things that we need to be on top of as founders is our leading indicators. Leading indicators show us how our business is performing and whether we are able to meet the results we have set for ourselves. One example of a leading indicator is maybe your pipeline. How is your pipeline growing? Because if your pipeline is growing, then that would mean that you're going to have business in the next month. lagging reports are like, no, what's most of what we are highlighting here. We are not saying they're not important. It's just that it tells us about the event once it has happened. So sometimes there's nothing much you can do about it unless it is now going to inform how you'll do business in the next month or the next quarter. So I also want to charge us to think about, in my business, what are those things that I need to keep afloat of even before they actualize. So if I know I have a good pipeline and my conversion rate is from the pipeline to actual clients is maybe 20 or 10%, then if I have 100, I know if it's 10%, I'll have 10 clients. So is 10 clients what I want to hit for the next month? If it is not, then you know that you can come back and do something about these 100 clients. So as you're thinking 100 people in your pipeline, so as you're thinking about what kind of indicators, what kind of management reports do you want to have as a founder, also think from the point of what do I need to be monitoring to help me know whether I'll hit my targets. For someone in production, I'm seeing Gavin is in production statistics. Is in production. And one of the things that you're talking about is production statistics. And what would help is thinking of, you know, that if I don't have these raw materials, then my production cannot hit a certain level. So me monitoring what the levels of my raw material helps me understand or be able to know that I'll be able to meet my my production requirements and hence my sales. So when you're thinking of management reports, try and take both sides of both before the event occurs and after the event has occurred. That was just a quick add on there that I thought was really critical to this conversation. Okay.
Hello, Purity.
Yes, Julie. Hello.
Okay, just to say something about the operational management report, I look at it in an angle of are you tracking the efficiency of your service? Are you looking at the productivity and the performance that you give across all operations of your company? Yeah, that's how best I look at it.
So I'm assuming then it has things like turnaround times or how you resolve clients' issues or stuff like that.
True.
Okay, great. I think this is a good conversation happening. If you haven't managed to write what management reports you'd like to have, kindly put on the chat and let's see. And then remember, critical to having the right data is inputting the right data, which all begins with bookkeeping and also other data capture that may not be related with finance if we were to look at management reports from a holistic point of view. Okay, so let's now go to financial statements. We have a few people who wanted to understand the financial statements. And so financial statements, we will talk of 3 financial statements: the profit and loss, the balance sheet and the cash flow statement. So the income statement or the P&L or statement of comprehensive income shows whether you're making an income or a loss in your business. And this is arrived at over a stated period of time. So you'll have the income statement for the period ended maybe when is today? We can talk of December 31st, or you can do as at every month. So for the period ended a certain date of the month. So it is you can either do it as a month, a week, an year, but in a year, but you need to see what is the time that you're doing. You need to be clear on the time so that you enter in a start date and an end date for the income statement. So this is ideally how an income statement looks like. Someone was asking about how audited financial statements look like. This is one of them. If you look at it, it has your revenues, it has notes. So these notes explain further English. That income is composed of what and what. So then cost of sales, it breaks it further down. So you have income, you have cost of sales or cost of goods sold if you're in manufacturing. Then you have what you call a gross surplus or a gross profit. Then from there, you have the administration cost and other operating costs and the finance expenses. And after that, you have the net profit for the year. Then you could be having other comprehensive income. That could be like foreign currency adjustments or other income. Maybe you get money from other ways. Then now from there, you have your net profit or loss before tax. Sorry. Oops. Before tax. So like now these guys are on the negative here. So there's even no tax charged here. But if you look here, there's a tax and then the total comprehensive income for the year. So that is how an income statement look like. And I'm sure most of us have come across this document. So the reason we are coming here after talking about bookkeeping is because if you're talking of income, we will not capture, P&L will not capture your income correctly if you did not capture your receipts correctly. The cost of sales, again, if you didn't capture your expenses that are directly related to the sale that you're making. So this means production costs or the costs that are involved in delivery of the service. If they are not captured correctly, then this figure would be wrong, meaning your gross profit would also be wrong. Then if you look at administration cost, are we able to keep tabs of all the expenses that we are incurring in running this company and other operating expenses, as well as finance expenses? If you have a loan and you need to pay interest, if you have a bank overdraft, this is where this comes. So that is the income statement. I will move into the balance sheet, and then now I will open it up for any questions on the three financial statements. So what's a balance sheet? So a balance sheet shows the firm's assets, liability, and net worth on a stated date. So a balance sheet will say, as at today is 22nd. As at 22nd April, this is the position of the company, and it shows the company how a company has been funded and how those funds have been utilized. And I'll show you what I mean by this. So look at this. There's a left and a right-hand side. So on the left, we have how has the company been funded. We either fund the company through people putting money into the business, and these people, we are talking about the owners. So that could be equity. We're also talking of suppliers, because once people give you goods or services on credit, they're giving you money for your business. Then we have bank loans. So this is where we are saying that people have put money. I mean, you have borrowed money to be able to run your business. It could be bankers' loan, it could be investors, it could be all that. Then utilization. So this is the money that we have, but where has the money gone? So the money could either be has gone for long use with an intention to generate revenue, like land, buildings, machinery, and other intangible assets. Then we have current assets, and these are easily converted into cash. We also have bank, we have short-term investments, inventory, debtors. So we see that when money has left the left side, it goes to the right side. And that's where a balance sheet has to balance, because all the money that has come in is somewhere. It has either bought something, or it is kept in a bank somewhere, or it has bought some securities somewhere. So that money is somewhere, and that's why we call this a balance sheet. And you'll see how this looks in an actual balance sheet. It looks like this. So if you look at the upper side, we have where the money is. We have the current assets, we have the long-term assets, which are property, machinery, and equipment. We have intangible assets. Then we have these current assets here. We have cash, we have trade, and other receivables. That is account receivable. We have investment. This is where, as a company, you've bought shares or any other money market fund. I mean, actually, this is money market fund, but you could also have market securities, like where you bought shares. Then we have other current assets like rent deposit, where you've paid money in advance. That is also an asset. So you have this being as 48 million. That is the total assets. For my Ugandan sisters and brothers, please forgive me for using Kenya shillings. Assume this is also Ugandan shillings. Then we go to how has this been financed. So you find that you have the share capital and you have retained earnings. So retained earnings is the money that you generate from the business, which is the net profit that has not been withdrawn by the owners of the business in terms of dividends. So it is plowed back into the business. So you have it as share capital and then retained earnings. So you have, that is one way that business has been able to fund, I mean, the business has been funded. Then we have these non-current liabilities, director's account. This is where the director has put money into the business, not as capital, but as a loan. So the director has decided the company doesn't look like it's doing so well. Let me put in money. And then when I'm ready, when the business starts doing better, I can get the money out of the business. Then we have dues to related parties. This is where like you can have a company that has a sister company. And so the sister company has also lent this company money. That's where that would go. Then we have current liabilities, like the trade and other payables comes there. So if you look at everything that the company, either the owners of the business, what has been retained in the business as net profit, what the directors have lent the business or other related parties, people who you haven't paid, all that is coming to 48 million. And we are saying that, if you remember the image I had on the other slide, is what is funding the 48 million here of assets and current assets. And that's why we call this a balance sheet. I would like to pause there and ask the people, anyone who has issues with understanding financial statements, before I go to cash flow, kindly share with me any question you may be having on the financials. Any question? Helen, I'll go back to you. Do these two statements, is it clearer what they are all about?
I'm getting the general idea.
Mm-hmm.
The previous one, the income statement is a bit straightforward because it's showing for a stated period the income that's coming in. This one is generally clear in the sense that I can appreciate the assets or what has been put in comparison with where it is coming from. It's just I'm trying to understand the terms to internalize them a bit, but that will not happen right away. But generally, it's clear, generally.
Okay. So one of the things that can help you is, because of the balance sheet items, there are items that are carried over, if I would put it that way. You see, what you have in probably property, machinery, and equipment today, or what you had in December, is what has been carried over to this year, if I would put it that way. So that's why we say as at a certain time, because it is not for a period. It is an accumulative position. If you look at your share capital, you may have put in share capital, but you may also have put in additional capital as years went by. If you look at retained earnings, it's what has been accumulated over the years. That's why we run the balance sheet as at a certain day. So today you can run the balance sheet for your company. But like again, I said, that would mean we are making an assumption that people are keying in things into the system as and when they are supposed to post them. And your finance person is also posting the required transactions, because there's the initial bookkeeping of things that we are doing day to day, but we have things like depreciation that need to be posted. We have things like expenses that we've incurred, but we have not paid for them. So those are the things that also we need to be on top of, affect our balance sheet. But I appreciate your comments. Milton? Yes, Milton?
Yes, I've withdrawn now, but what I wanted to say, I now see the importance of proper bookkeeping, because it's from proper bookkeeping that we can now generate all this information. Yeah, I was just trying to now putting the pieces and bits together. Yeah.
Thank you, Milton. Okay. Thanks for all the lovely comments in the chat, and I'm glad that we are gaining clarity. Derek, I'm going to request for 10 minutes after the top of the hour, because I can see we are at 8 minutes to time. And I wanted to request, we also needed, I know we've been asking questions as we go, but there may be more questions so that we give people time to ask. So Derek, maybe you can I can request for that even as I'm finalizing on the financial statements.
Yes, that's okay. And also we have posted a survey link in the chat box. Fill it in. Some of you have requested for the recording. Some of you have requested for the PowerPoint. If you fill in that, we'll be able to get all your details and we'll be able to engage further with you. So before you log off, fill in the survey. Let us capture your details so that we are able to engage with you properly. Yes, you can carry on. In the meantime, feel free to fill in the survey link so that we get your details to engage with you, the recordings and PowerPoint presentations, and respond to any questions that you might have. Thank you.
Thank you, Derek. Great, let's go on. So cash flow statement. So this is a very critical statement in the business, and it's not mentioned a lot. You know, people think a lot about P&L and balance sheet, but cash flow is also equally important, and it shows the cash inflows and outflows caused by the firm's activities during a stated period of time. And they are mainly, so the activities are mainly classified into operating, investing, and financing, and I'll break that down for you in a minute. So I hope you can see this. Let me try and expand it from my side. I don't know. Is that better? Is the expanding working, Derek?
Yes, it's working. And also, if you're logged in on your side, even as Purity is expanding, you can equally expand the same on your own.
Oh, yeah.
Yes.
Yes.
And for
okay.
those that are providing their email details, please fill in the form and provide your email details in the form, not in the chat box. Fill the survey form, not your details in the chat box. Provide the details in the survey form that has been shared. Thank you.
All right. So let's move on to cash flow. So I mentioned that there are a cash flow has three sections. There's this what we call cash flow from operating activities, then cash flow from investing, and cash flow from financing. And I'll explain what we mean. By operating expense activities, we're talking about the core of the business. This is what the business does. So we start with the net profit, then we adjust for depreciation. And the reason we do adjustment for depreciation is because depreciation is a non-cash expense. So it may have affected the profitability of the business, but we didn't remove money to pay for depreciation. So we add it back, and we also deduct the tax that we have paid. And then now from there, we do all these changes in trade receivables or account receivables, and changes in trade payables. And depending on whether the change was an increase or a decrease, we either add it or reduce it from our net profit. I don't think we need to get into the details of why, because your accountant can help you with that. Then let's go to the cash flow from investing. So investing, we are looking at, are there things that you have done? Like, have you CapEx, have you bought any CapEx? Have you sold any CapEx? Because that is what would give us cash flow from investing activities. For this business, they had done purchase of assets, and they had also made a prepayment for rent deposit. So that would come here as cash flow from investing activities. So if you look, we have deducted it from this business because it's a cash outflow. And then we have financing activities. Financing activities could be either you as a director has put in money into the business, or you've removed money, or there are other related parties who've loaned the business, like we had seen in this business earlier. And then there's also maybe you have decided to put money into money market. That is what would come into financing, or you have bought shares, whatever it is that you'd consider a financing activity for the business would come here. So what you usually do is you get the figure for each section. What is the net cash from operating? What is the net cash flow from investing? What's the net cash flow from financing? And then now you're able to add that to the opening cash, to the opening cash. Where is the opening cash? To the opening cash, so that you can get the closing cash. Now, this is the acid test for your financial statements. For those people who are saying they would like to understand their financial statements more, if you look at this figure here, the closing balance, it's 3 million and it's a negative 3.1 million. Sorry, it is 519,000. Sorry for that. It's 519,000. And what you want to see is this what is also reflected in our balance sheet as a cash balance? So let's go back to our balance sheet. I need to reduce it. So let's go back to our balance sheet. Aha. Can you see here, cash and cash equivalent? It's reading 519,032. And that is the same amount of money that is showing in our cash flow statement as 519,031. So one of the ways you can test the soundness of your financials is that. And of course, there are many other ways you can look to see. You can look to see whether your statements are speaking to each other. Let me pause there and ask, is there a question on the cash flow statements? If you look here, the amount due to related parties is 5.5 million, and it was an injection into the business. And if you go to the balance sheet, you will see there is dues to related parties, meaning this is a very fresh loan from this is a fresh loan from the related parties, and that's why it's coming here as money that just came in. If you look at the director's injections or drawing, we are seeing in the beginning we had 20 million, and at the end we had 28 million. So that difference there means that directors injected in more money, which is the difference that is also coming to show here as the 7 million. So you find that for you to understand the cash flow statement, you also need to understand your balance sheet, because the changes in different items in the balance sheet is what comes to inform the cash flow statement. Yes, Milton?
Yes, Purity, thank you for the elaboration on the cash flow. In a situation where I got money from a funder, from an investor, where is that one captured?
Here, financing activities.
Oh,
yeah.
Okay.
Okay. If there's no question, I will move on to the next thing. Wow. Okay. So the next thing is on interpreting our financial statements, and here I'll go a little quickly because you'll get the slides and they'll give you the different formulas, but there are points I want to emphasize. So like in interpretation, you can do a horizontal analysis of your business, and you can also do a vertical analysis. Most of the ratios that I will take you through have to do with vertical analysis. This way you're comparing either an aspect of the P&L with sales or an aspect of the balance sheet with the total assets and total liabilities. And the reason why you need to do vertical analysis of your books is so that you can be able to allow for comparisons and industry averages, because most times if I compare your financials with absolute figures, I may not be able to know if one company is doing 50 M as sales, another one is doing 20, but the expenses of the 50 M1 absolute figures cannot really tell me the health of that business. That's why we do vertical analysis and on a business. So there are different kinds of ways to interpret financial statements, and one of them is profitability, is ratio analysis. We have profitability ratios, we have liquidity, we have investment ratios, and we have gearing ratios. So I have covered just a few of these ratios that are really critical for the business. So when we start with profitability, we are saying they provide an understanding of how well the company has utilized its resources in doing what? In generating profit and shareholder value. And here is a number of formulas that can help you understand the profitability of your business. You have the gross profit margin, which is the gross profit divided by sales. Then you have the operating profit margin. It's the operating profit divided by sale. Then you have the EBITDA margin, and this is a very critical margin. So you'll allow me to stay here a bit. So you'll find that most investors will look for your EBITDA, and EBITDA means earnings before interest, tax, depreciation, and amortization. So what we do, let me take you back to the balance sheet so that you can understand what EBITDA is. Sorry. Yeah, not the balance sheet, the P&L. So if you look at this P&L, we have net profit before tax. We also have this profit here that is after. This profit is after finance expense and after operating expenses. Now, interest is a finance expense and operating expenses include depreciation. So if you were to look for the EBITDA of this company, you would take the negative 7.5 million, you add back finance expense, assuming that finance expense is purely interest, and also add back the depreciation for you to get the earnings before interest, tax, depreciation and amortization. That's how you get your EBITDA. It should not, your EBITDA does not include your interest expense, for financing, and it doesn't include your depreciation. So that's the clarification I wanted to make there. So if we go on, so then you have the net profit margin, which is your net income divided by sales. So this is what I'd encourage you to do. If you have your financials, after this, because you're going to get the slides, take this and work it out in your from your financial statements, because you have this. I've already shown you what a gross profit is, what an operating profit is. So operating profit is your gross profit less your operating expenses. It gives you your operating profit. Then we have EBITDA. I've shared with you what EBITDA is and what net profit margin is, which is the bottom line of your P&L. That's your net profit. So when you're looking for your net profit margin, you say net profit divided by sales. So another key ratio is liquidity measures ratios, and this really checks the ability to pay off your short-term debts. And this is where you say your current assets divided by your current liabilities. Again, quickly, let's go back to the balance sheet so that you see where this is. So current assets here. Current assets is 8.531 divided by your current liabilities, 1.129. That is how you get your current ratio. And this is how you know whether your business is healthy. So if a company is not able to meet its short-term obligation, if it is less than 1, the ratio of current assets to current liabilities, then you know you're not able to meet your short-term obligations. If it's 2 to 3, that's ideal. Again, if it's more than 3, you need to do a deeper investigation and ask, what is the composition of your current assets? Because if you're having very high account receivables, that's not good for your business. If you're having very high inventory in your business, that is also not good for your business. Then, so I've already spoken into the profitability margins. Then we have return on assets. This one measures net income divided by your total assets. So we want to see how well is management employing the company's total assets to make a profit. So the higher your net income to total assets is, the better for the company. And again, return on equity measures how much the shareholders earned for their investment in the company. Same concept as return on assets, but now this is for the shareholders. So again, the higher it is, the better. And always ensure that if you're able to get your industry averages and compare your ratios with what is in the industry as an average rate, that would be very helpful. So when we talk of return on capital employed, we are looking at the net income divided by the capital employed. And capital employed here, we are looking at your debt liabilities plus your shareholders' equity. That's what we call capital employed, because you've asked, when you look at how you're generating income, it is because you have either taken debt or you have shareholders' money. So you always need to gauge yourself and see, from the money that I've taken up, either from shareholders or from banks or other investors, am I generating an income? Then we have leverage ratios, and these ones show how leveraged is your company, or rather, what is the amount of debt you have in your business? So the first one is debt ratio, which is usually your total liabilities divided by your total assets. The second one is debt to equity ratio. So we are comparing your debt as opposed to the money that you have put in the business as a shareholder or as investors. What does that ratio look like? And finally, we have this one, and I'll camp here just for 1 minute because this is very critical. When you're going to look for money in a bank, or you're getting investment from who? From investors like Milton. One of the ratios they are very keen on, and they get in your books. Are you able to pay us? And they do this by checking this ratio. Can your interest and principal go into your earnings before interest and tax? And this earnings before interest and tax is what I shared with you earlier. So before you do any interest and before you do any taxes, what that profit, you divide it with total debt service, which I've said is the interest you're expecting to be paying and the principal. And the rule, what do you call that? The rule of thumb is it should be at least 1.25 for the financial to feel they are comfortable giving you a loan. Okay, I think I will stop there, Derek, and maybe address questions because some of the things I've written as tips. Okay, let me just quickly run through the tips, but there are not many, but I've been covering them as we've been speaking. So financial red flags for your business is inconsistent financial statements. I've shared with you how to check the accuracy of your financial statements. High account receivables, if you're having declining profitability, growing account payables, high debt ratios, high inventory, and over dependence on a single customer. Because if that customer fails you, then you're out of business. Then how can you improve your cash flow? First, separate personal and business finances. Do product or service diversification, monitor your account receivables, give discounts to encourage early payments, maintain optimal stock levels, and close monitoring, of course. These are just two. And finally, we have tips for driving growth. So I know sometimes finance is looked at as just taking care of the money that we have, but you also have to think of how am I growing what I have as a business. So one is client segmentation to ensure focus on high value customers. So you need to understand, and I know this has been covered, or if you are familiar with the business model canvas, the right side talks about your customer. It's very important to understand your customer profile so that you segment them and you focus on your high value customers because that will bring in more revenue. Then there's diversification of products because the more you diversify, you're reaching different targets and that increases your income. Then increasing your customer lifetime value. This is the time you will stay with a client. And if you discover that most people, when you call them, they do upselling for you. You know, maybe you're done with one of their products, but they ask, is there something else that you could use? That's the same mentality we should have as founders. What else can our customer enjoy? So today I'm providing this service, but what else can I add on so that they keep coming back? And the time I have with them, because customer acquisition is more expensive than customer retention. If you retain a customer, you'll get more from them. Then increase customer channels, and because the more you have multiple channels, you're able to reach more customers and increase your revenue. Then automation of processes to increase efficiency is also something else that you can do. So please allow me to stop there and open it up or hand it over to Derek. I feel like I've ran that last section, but I'm also cognizant that people need to move to other things. Yeah. So.
Wow.
Yes. Any question?
Thank you so much, Purity, for taking us through this session. And before we go to the questions and close this webinar, I would like to make an announcement that this is the first, and this is actually the third in what we are calling the Financial Mastery webinar series. Other series are already on our YouTube channel. You can go and watch them there, and this will be uploaded there as well. But I would like to make an announcement that for the next 4 weeks, starting this Friday, we have deeper trainings, in-depth trainings about financial management and financial mastery for your business. Like, for example, this Friday, we are dedicating it to look at personal versus business finances, unit economics, and working capital management. And if you'd like to sign up for that class, indicate in the survey. If you've already filled in the survey, just include in the chat that you would like to be invited to attend that class. Once you give us permission, we'll reach out to you and provide you with the details. This one is not public. It's not for everyone like this one, which we have allowed everyone to attend. And next week, we will look at the analysis of financial statements. What Purity has taken you through is an introduction. So we will look at deeper analysis of the financial statements and how they can help you to grow your business. And then the week after that, the third week, we will look at the investment processes, packaging and financial forecasting. How do you package your business? How do you, what is financial forecasting? How does it look like for your business? Then we'll look at the term sheets, valuation, and due diligence. I know she talked about that briefly, but we'll be looking at these components in depth. So if what I have mentioned is something that is good for you, then indicate in the chat box. We will reach out to you. Give us your phone number, give us your email address. We will reach out to you with the details of how you can attend that class and what is needed for you to attend that class. And if you haven't, then if you have filled in the survey, then it's fine. If you haven't filled in the survey, we encourage you, fill in the survey, and we'll be able to reach out to you through the information that you provide us with. Now, we do understand we asked you for 1 hour and 30 minutes. We extended by 10 minutes, and you're busy people. We wouldn't want to hold you here. But if there is just one person who has a burning question, we will allow you to ask, and we will respond to that, and then we will close this session. Who is that lucky person who is going to be the one to ask the question? Feel free to unmute and ask. We will respond to only one person here, but everyone else who will ask questions through the survey and through the chat box will be able to reach out to you personally and give a response where needed. Any question?
Derek, kindly repost someone can repost the survey.
Yeah, I have reposted the survey. Yes, Dr. Hemisibo, you're the lucky person whose question is going to be answered. As you're asking, fill in the survey, please. I have shared it on the chat box again. Thank you. Dr. Hemisibo.
Thank you very much. Thank you, TBN. Thank you, colleagues. For such an important platform that we have to express ourselves and also learn more about what we do daily. My biggest issue is the clarity between the three, and then what is most important here, maybe so that I can also understand it on the way. One is financial statements, like Purity talked about, business or statements, then books of accounts. Now, the confusion to myself is one is whenever we reach at the books of accounts and audited books, what is this that is supposed to be audited exactly? So this is where the confusion, I have in relation to these topics that we are learning most like these days. So this gives me a hint at least to understand more. Thank you very much.
Okay, thank you. Thank you for your question, Dr. Ahibisibwe. Yeah. In Kenya, we'll just call you Doc.
James.
Yes. So I hope I'll attempt to answer your question. Yeah. So we started from, I hope you were here when we started. We started from record keeping and how that comes into the systems. And from there, we have the financial statements, right? Now, there's a way that, so audited financial statements is when another party, an external party comes in and looks at these books that have been made, the profit and loss, the financials, the P&L, the balance sheet, and the cash flow, and gives an opinion whether one, those books represent the true position of their business, and how they will do that is they will keep going back. So for example, if you have account receivables of 5 million, they will want to know who is this who makes up the 5 million at the actual account receivables. They will do something we call, I'm trying to remember the name, where they check with the actual people to find out, is this the actual money that you owe this business? They'll get schedules of maybe any accruals that you have as a company, that is money you haven't paid, account payables. What they are doing is verifying that every entry in the book of accounts, now that you have used the word book of accounts, there are those different books that make the main financial statement. So if you go to account receivables, you will find there are different clients. All that would call books of accounts. If you go to accounts payable or the suppliers, those are books of account. If you go to the expenses, every expense would make a book of accounts. So all this is consolidated and mainly through a system. Like I was saying, you need to post it in a system, then it produces. If you do not have a system, then your accountant, most accountants do this with a system, or they'll just use Excel sheets to have the different, to get the different values and consolidate them into proper financials. So the bookkeeping helps ensure that you have the proper books of accounts, which now inform your P&L, your balance sheet, and your cash flow statements, which then get to be audited. The thing is, most of us founders have very many books, yeah? What you share with URA or KRA is different from what you share in the management meetings, or what you share with the board, with what you share with your spouse. Someone says that for whatever reasons, But our push as TBN is integrity. The first thing if I'm trying to invest in your business, I'll look at your tax returns and what you have given me as your financial statements. If the two of them are not speaking to each other, then I know there is something off. So I would highly encourage us to maintain that level of integrity across your bookkeeping. And of course, there are things like KRA would require. Like, for example, one of the ways your management reports may differ from your financial audited reports would be if you have a different policy, say, for depreciation than what URA allows or what KRA allows. So if you have that kind of thing happening, that may change, that may bring a difference between what you have as your management reports and that you use internally to what you share with, say, KRA or URA. So there are a few things that may bring the difference. But in terms of your actual sales, your actual expenses and all that, I would encourage you to maintain the same integrity, to maintain integrity across your financial reports. I hope I've answered you, James. Do you feel answered?
True. Thank you very much. Yes, very true. Thank you very much.
Wow.
Okay.
Thank you. Thank you so much, Purity. Thank you to all of you, business owners and entrepreneurs, 73 of you that have logged on today and given us your 1 hour and 50 minutes. Thank you so much. Like the announcement was made, for the other financial deeper dive into the financial mastery, starting this Friday, running for the next 4 weeks. If you haven't filled in the survey, please fill in and give us your details. After this session, we'll reach out to you with the details of how you can plug into those financial mastery trainings. So thank you so much for logging in. We will be monitor the social media platforms, monitor the WhatsApp groups that you're in. When we prepare another webinar, we will be inviting you to come and be part of us. We remain Transformational Business Network. We are here to turn that chaos into clarity, not just for the finances, but even the operations of your business. Thank you so much. Have a good week. See you next time. Bye for now. If you have any further
Thank you.
comments,
Bye-bye.
leave them in the chat box. We'll be able to respond to them later. Thank you so much.
All right, thank you. Thank you very much,
You're
Derek and
Thank you.
Purity.
Thank you from Uganda, Kampala.
Thank you. And we had some
Thank you.
people logging in from South Africa and Namibia.
Comment section.